Hi there, my name is John Stevenson and welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about the 3 greatest retirement risks and what you can do to protect yourself from them. Okay, so I meet with a lot of people who are close to retirement or are already retired, and the top 3 things that they are afraid of, and I would say are probably the riskiest in their retirement as well as yours, as well as mine. And I want to talk about these because I get these questions a lot, and there are ways to fix all 3 of these. So the number 1 is running out of money before running out of life. That's a big one. People want to have as much income as possible. They want to take out of their retirement assets as much as possible, but they also don't want to run out too soon and have to go back to work or lean on loved ones. So that's a big one, okay? So number 2 is not having enough money for long-term care. So let's face it, 70% of all retirees at some point or another will need some sort of long-term care. Now, we all hope it's not us, but at the same time, we need to plan for it because that's a high probability that we will need it. Okay, and then of course, number 3, and you probably guessed this one, but it's stock market risk. Okay, people are scared of risk. The older we get, the less time we have, and especially if we are at or close to retirement, the less time we have to recover when there's a market crash. And so there's just a lot of things weighing on people's minds right now. And people are worried and they want to make sure that their income's good. They want to make sure that they don't have to dive into all of their assets to cover long-term care. And they're afraid of going back to work. They're afraid of, leaning on their kids or other people for financial, help. And, we all want to be able to have that self-reliance as we get older. So I'm going to be talking about that. I'm going to share my screen. I deal with annuities. Okay, I specialize in annuities, and I look at hundreds and hundreds of products out there. I work with about 70 different carriers. I show people the highest and best income they can get. I also show them how to protect their money and protect it, against market risk, and also have decent growth. Believe it or not, there are annuities that give you guaranteed growth, and there are annuities that give you some decent growth from the index, but you have to choose the right carriers for that so that you can continually have good growth from those indexes. Because a lot of times you'll get in these contracts and they'll lower their cap or their participation rates, which limits the growth that you can get in that index. And so there are certain carriers that are known for it, and certain carriers are also known for keeping them high at a constant rate, which is important when you're looking for growth and market protection. But for the most part, people want income. They want income. They want to make sure they don't run out. And there are ways to do that. There's ways to cover your long-term care as well. And of course, protect your money from the market. All right. So I'm going to share my screen and let's kind of go over this a little bit so you can see visually how this could work for you. Okay. So I am just throwing in a married couple. They're 60 and 61. $500,000. And I'm just going to show you real quick as far as how to overcome the not running out of money aspect. So if they wanted immediate income, like income starting next month, this is what they could get. And this is all the options that are on the table right now. And you can see there's a lot of them. But you can see the top one is with Guaranteed Income Life. They're also known as Gillico. And then you got Corbridge. They're 100 years old. They bought out AIG a few years ago. You got Prudential, you got Athene, you got Allianz, which is the largest in the world. So there's a lot of good options out there. And this is for immediate income. This is guaranteed joint income for both spouses. It never runs out, which is good to know. If they take this out until they're 100 years old, they're going to take out $1.2 million. Okay. Now, they might not need income right now. That's the thing. So a lot of people, they'll put money into this, maybe from their 401k or their IRA, and they're saying, hey, I'm going to work 5 more years or however many years you want to work. And then I'm going to start taking my income. What can I get then? Well, it's definitely more. So we'll see how much it is. So if we were to push it out 5 years, then it'll show you the top carriers for deferring it out. Now, for this instance, it's Corbridge, and you can see the payout's quite a bit higher. It's 50,000, almost 51,000, followed by National Life Group, NASA, American Equity, Midland, and so on. So if you're looking for the highest payout and you want to defer it for 5 years, you can see it's much better to go with Corbridge in this instance. And it's the Power 10 Protector Plus income. And that is very popular right now. People are buying that because it is giving them a ton of income. And this is pretty decent. So almost $51,000 a year. It's guaranteed never to run out, even if the account balance runs out. And I'll show you that because the account balance will run out. Okay. It's not going to last forever. So when you're looking for highest guarantees, you're looking for an income product, not a growth product. I can show you growth products, and I'll show you those next. But for income products, even with index growth, because they give you part of it, it's a call option, so they will give you part of the growth because they purchase call options with the S&P index and other indexes. But you can see with this, see the annual income? $50,750, guaranteed for the rest of your life. You take it out till you're 95, you take out 1.5, almost $1.6 million. Okay, if you live longer, you take out more. You can see the account balance does not last longer than like 77. Okay, and that's with okay growth. If there's less growth or zero growth, it's not going to last. You go up to the guaranteed side, same income, it's just lasts, less. So instead of lasting till it's 77, you last till you're like 72, 73. But that's the account balance. That's the death benefit. Okay. That's all you have to worry about as far as the money running out. Yes, the money runs out, but your income does not. And so to answer the question, will my money run out? The real question is will my income run out? Because I don't want to run out of income before I run out of life. And so this, in my opinion, is the best option to fix that. And that is the best solution, in my opinion, to get guaranteed contractual income for the rest of your life and your spouse's life without worrying about your account balance and without worrying about taking, maybe just a little bit less. Maybe you want to take $25,000 out a year, and hopefully the market will give you the growth that you need, and hopefully that you won't run out by a certain age. But you're not getting the income that you want. You want a lot more income. And this allows you to get a lot more income from, a lot higher withdrawal rate than you would normally do if you just left it in your 401k or IRA. Okay. All right. So that's it. I mean, when we're talking about, and I'm going to skip LTC until the end. I'm going to do LTC because I'm going to show you a phenomenal annuity LTC policy that I think you'll really, really like. So we'll go over that. It's only available in certain states though. So that's the caveat. Otherwise you can buy annuities for LTC and they got doublers as well. But first I want to talk about just protection against market risk. Okay. Because you might not need income. Maybe you're thinking, well, I just want protection against market risk. What do you have for that? Okay. Well, there's a couple options. So if you go to, let me just see here, we'll pull up top MYGAs. MYGAs stand for multi-year guaranteed annuities. These are like CDs, okay, but they're usually paying higher and they're tax deferred even with non-qualified funds, which is pretty nice. So this is the top rates that they're paying right now. This is for 2, 3, and so on. So 2 years, you can see we're like 5.2 is the top one. Most of these are 5s. Sometimes 5.5. Yeah. 5 years, 5.6, SBLI, Exonic. So 10 year, yeah, 5.5. Not bad. Equitrust is awesome. And they'll give you interest only if you want to take withdrawals from that as well. So if you want an A-rated, Clear Spring is pretty close, 5.35, and they'll allow you 10%, but you have to wait after 1 year, and then you can do it after that. So anyways, there's a lot of things you can do with this. The guaranteed ending value for this one, and this reverted, this is actually based off a $350,000 investment. So $350,000 will actually grow to $589,405, as you can see right here. So if I go to a calculator, it just gives me an absolute, let me just change that real quick. I'll change this to 500 so you can see apples to apples with the income products that we were looking at. All right, so we look at the growth. Pretty substantial. So $26,750 on the first year, 500 grand times 5.35. If I let that compound, I don't touch the money, it compounds. And over time on the 10th year, I earned $42,760. That's phenomenal. Okay. And that's what I would get. So $42,760. And then the ending balance is $842. Which means my earnings was $342,000 guaranteed. Then if you want to take it out, you can roll it over into another MYGA if you want, or you could just take it out. And if it's in an IRA, then you can transfer it back to your old IRA or just a new IRA, wherever. Or if it's non-qualified funds and you'd still want to take it out, then you'd be taxed on the $342,000. Okay, so it's really that simple. And it's a great guaranteed rate, but it's not for everyone. Some people need more income. You can see from here, it's not going to give you a ton of lifetime income. It'll give you some interest for a specified term, but if you're looking for lifetime income, then I recommend the income rider. Okay, so that's it with the MYGAs. If you want to book a call, we could talk about that. We could talk about income riders and see which ones would be best for you if that's what you're looking for. But let me show you some indexed growth, okay? Because we talked about that a little bit as far as options. Now there's a lot of companies In fact, I got over 3,000 index options here that we could look at. Okay, but I'm not going to look at all of them. So you might be looking at this and say, how am I supposed to decide which one to use? Well, in my opinion, you should use indexes that are well known, like UBS, like S&P 500, NASDAQ. PIMCO has actually done quite well with Allianz. So there are some decent growth indexes. Delaware Life, they are known for having a very, very high renewal rate for the S&P index. They've got 70,000 policies, and 88% of them renew at or above. That's really good because these other companies, not so much. They will give you a high rate in the beginning. They might give you 80% of the S&P and then lower it to 5% the year after. Okay. And people then are stuck in these contracts. And they're like, why did you sell me this? And so I'm going to pull up one that I know, which is Delaware. And they're not the only one, but this is the one we're going to talk about today. All right. So Delaware. All right. So we got some different ones. So if we look at this one, let's see. I'm going to go down. I'm going to actually look for the S&P 500 as well. So we can narrow that down a little bit. Okay, so this is good. I like this. So they're not giving you all of it, but they're giving you 60%. That's not bad. And when you know, and they're known for having a high renewal rate after that, then you can bank on these numbers a lot more. You can count on them. Okay, so you might have a advisor trying to sell you something and he has these big numbers he's blowing up and you're like, I don't know. It might be too good to be true. Well, it is. All right, guaranteed side, you can see guaranteed if there's no growth in the index. Well, we got other problems, but you can see even with that, they actually still raise your contract value, which is kind of cool, and the death benefit as well. But let's look at actually what it'll probably do. Based off of 350,000, it'll grow pretty substantially. Yeah, in 20 years, like $1.8 million. Now, let me go back here because that was based off of 350. I want to see 500. And you could put money into this and take withdrawals as it earns. There's nothing wrong with that. You just have to realize it is not guaranteed for life. Okay. It's just whatever it earns. So we look at this and say $500,000, decent growth in 20 years. Oh, whoops. That didn't even change that. Let me go back here. I want to make sure that's $500,000. All right, so you got 100% into the 1 year, participation rate 60%. There's a lot of different indexes here, just so you know. You've got this one too. It's caps though, caps it at 10.5. So the participation rate actually pays you more. So I would recommend that over these other ones because these ones, as you can see, started in 2023, 2024. They're basically back tested. I wouldn't touch them. For this illustration, we're just going to look at the 350,000. Okay, so 350,000 is still going to grow substantially, and if you look at withdrawals, if I want to take out, and I'll just bring it down proportionally. Let's say I'm going to take out, I don't know, $36,000 a year. Okay, and we're gonna start it at 65. We'll end it at 95. Let's see if that'll even let us do it. Now remember, this is not guaranteed. This is based off of hypothetical growth. Hypothetically, it should work. But if it doesn't, then you're going to run out. You're going to run out pretty quick here in your 70s and 80s, okay? So if you're looking for guaranteed income, highly recommend looking at an income rider versus something that gives you hypothetical growth, decent growth, but is changeable. I mean, the market's going to deliver different returns every year. And sometimes it won't deliver any at all, which will change all of these numbers, okay? So let's look at the last option or the last risk, okay? The top three risks, okay? We've got market risk. We've talked about that. We've got running out of money before you run out of life. Okay, that's another. So we fixed that. We've got the solution to that as an annuity with an income rider. Now let's talk about long-term care, okay? Because if you have that concern, there is a company out there that I highly recommend. So I'm going to pull this out. This is Equitrust. And we're going to put in some numbers here. All right, just put in my name. We'll say Nevada. This is not available in all states, just so you know. All right, and I'll just say I'm 65. I'm buying it right now. And my risk class is preferred. Most people will be in this, some standard. You cannot be denied on this. It's guaranteed. Okay. So if you're in horrible health, you'll still get secure. And you can see if I did secure at age 85, my monthly benefit, which is tax-free, is $34.67 every single month. Pretty good. But I'm probably going to be at least a standard, if not more. So it's $5,300, it's $5,325, and that's for 5 years, as you can see. Pretty nice. A lot of you are going to be preferred though. Even if you're taking medications, you'll probably be preferred. Okay, they got some knockout questions which we can go over, but you can see in preferred, and this is based off $100,000. Your monthly is going to be $7,801. Now, if you're high roller and you're like, well, I want to put more money in, let's see, $317,000. That'll give me $24,000 a month. You could totally do that. You can put in more money, and you might be thinking to yourself, well, a room right now, a private room is like $9,000 a month. What is it going to be in 20, 30 years from now, right? It's definitely going to be more. So I want more income. So you're just like, all right, well, what's the max I can get? Well, you see based off of $317,000, it's $24,766 every single month, tax-free for 5 years. Pretty nice. So that's how that works. That's how you solve the long-term care. And it's tax-free because it's used for long-term care. So it's a pretty nice benefit. And this is a fairly new product. EquiTrust is a great company to work with as well. They are rated B++ by AM Best, but they are rated A by Fitch and Standard & Poor's as well. So really, you've got two agencies rating them as an A and another one that sees the outlook good. And they're probably, in my opinion, will rate them an A at some point. So you be the judge. You can look up EquiTrust and give me a call. We can go over this. But I highly recommend this product. If you're looking for LTC, this is one of the best out there. I mean, you can put a policy in with Bright House or Symetra as well. Those are life insurance policies, A-rated companies, and they'll do full indemnity, which means they'll actually send the payments to you even if you're not in a home, which is kind of nice. So other long-term care policies require that you're in a home. So we can talk about that. Let me know if you got questions. If you want to book a call, there's a link below this video. If you want to go to my website and you want to search annuities on your own, it's johnstevenson.com, and you can book a call with me there as well. So I hope this has been helpful. This has been a little bit long for some of my videos, but I wanted to really cover these in depth because these are real questions people ask me every day. And again, go to my website, johnstevenson.com, check out the calculators. You can book a call there. And if you got questions, comment in the section below. If you like the video, make sure you like, subscribe to my channel, and look forward to seeing you next time.